In my job, I say, here's what I think is going to happen, and here's why. I'm getting dressed, and while I'm getting dressed, I have Bloomberg television on, and I'm listening to what are the headlines, and what market moves overnight, and what's the big story right at this moment. When I commuted via train, I would log into the Bloomberg app on my phone and check my emails and see what the market was doing, and figuring out what to write takes all the time. The actual production and writing doesn't take any time at all. If you have good reasoning for your ideas, people will forgive you if you're wrong. I walked into the room with the HR people and the other interviewers and said, we have to hire this guy. And so the HR person said, well, why? I said, he's going to be my boss one day. And lo and behold, 10 years later, he was my boss. I enjoy being on the radio and on television. So you wind up running a number of different scenarios and kind of licking your finger, putting it up, feeling which way the wind blows, and adjusting your forecasts. My name is Ira Jersey. I'm the Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, which is Bloomberg's research arm. I started my career in the mid-90s actually trading currencies down in Philadelphia, and then I moved to the Vanguard Group, where I worked for a few years. And then I moved up to New York City in the late 90s to be in fixed income risk management. From there, I moved on to fixed income research, and that's what I've done for the last 19 years. Has been fixed income research, both credit research and rates research. Basically, an interest rate strategist is 50% economist and 50% financial engineer in many respects. So my current job is to write research that determines what is the direction of the market going to be. So where are interest rates going to go? Everyone always asks me, where will the 10-year yield be at the end of the year? Also, I watch the Fed, so I'm one of the many Fed watchers, and I also get very deep into the weeds. What makes the market function? How does liquidity factor into the market? What's bid offer? What's the supply and demand factors going on? And that really differentiates me from a lot of my peers in that I really understand those micro foundations of the market, which a lot of others kind of gloss over and take as a given, and they're more important, I think, than most people realize.
Why knowing where interest rates are going is so important?
So interest rates are important because it's the basis for everything else. When someone does a discounted cash flow for an equity, they use an interest rate that I forecast. And the direction of that interest rate matters for that investor. When the economy is doing very well or doing very poorly, then the Federal Reserve might change their policy to be easier or not. And why? Why does that work? Why does that matter? Well, it matters because people take out loans, and when people take out loans, the economy tends to expand. And when the economy expands, other things happen. So there tends to be knock-on effects. But those aren't always the same cycle to cycle. There's little changes that happen and have happened over the course of the post-war period where, for example, economic cycles have gotten longer, where consumers borrow money has changed, where companies have borrowed money changes. So for what duration? 20 years ago, when I first started in this business, about almost half of corporate debt was very short term, was under 2 years to maturity. Today, that's less than 20%. So you can see how those little changes in interest rates and the little changes in behavior by corporations over long periods of time, that can affect the economy, and it can affect the way monetary policy works. And the Federal Reserve chairs always say that monetary policy works at long and variable lags. Well, those variable lags is what we study as interest rate strategists and should be studying because it matters to the overall economy, it matters to policy, it matters to investors.
So you would say for your research, your major audience is this policymakers, investors, or larger audience?
My research has always been for institutional investors. Primarily, that's our audience. Since moving to Bloomberg, we have over 300,000 terminal subscribers, and those 300,000 people are my audience. Not all of them are institutional investors. Many of them are financial advisors, policymakers, even corporate treasurers and people in corporations. So now my research reaches a broader audience. So the way that I deal with that is I have what I call my core investors, my core customers, who are institutional fixed income investors. investors, or multi-strategy investors, people who allocate between fixed income and equities. Could be hedge funds, macro hedge funds, for example, read a lot of my stuff. But I also do things now that are more basic, and they're more basic because they're for a broader audience, like financial advisors who don't really understand what the difference between a 5-year note and a 10-year note is. So they should, but they don't. What's funny is now that I work at Bloomberg, before I worked at Bloomberg, I came here once and said that I was like one of these super Bloomberg users, because I wake up in the morning and on my radio, Bloomberg radio is playing. I'm getting dressed, and while I'm getting dressed, I have Bloomberg television on, and I'm listening to what are the headlines and what market moves overnight, and what's the big story right at this moment. When I commuted via train, I would log into the Bloomberg app on my phone and check my emails and see what the market was doing, and even respond to emails. So it was a pretty efficient commute. And then when I got to work, I already knew kind of what my day was going to be like. Was it going to be a research day? So a day that I was actually doing research, studying things, looking for new ideas, maybe building models for either interest rates or for the economy or something else? Or was it going to be a day that I was going to have to be reacting to news items? So if overnight, for example, there was a speech in Hong Kong by a Federal Reserve governor that was getting a lot of attention, my first hour or two might be replying to emails and seeing if my opinion of what the Fed was going to do or what the market was going to do was going to change because of what happened overnight. My day is basically I write research in the morning, and in the afternoon I'm thinking about what I'm going to write the next day, because we have to submit things to our editors kind of by lunchtime, and then we're waiting for the editors to come back to us for with our material. On the sell side, it's different. So on the sell side, when I worked for a bank, we only published once or twice a week. We didn't publish almost every day, and we would also put out shorter notes with trade ideas that were opportunistic. So we'd be watching markets, looking at different models that we had for things that were rich or cheap, and when we found one compelling, we would then let our customers know by writing a short research report. Shorter the better. One of the things I think is, some people think fixed income research, and I've interviewed people like, oh, I want to write these 20-page papers and I want to be in research because I like writing academic style papers. We do a little of that, but most of the time our customers want short snippets with 1 or 2 pictures and a couple of paragraphs of reasoning. So it's a 2-page thing, not a 20-page thing.
How long does it take for you to write 2 pages?
Half an hour.
Do you give it to read to some of your employees?
So yeah, usually so what almost always happens is I have a small team, and at least 2 of us will read it, and then it will go to the editor. So there is an editing process. I think the variety of it, the fact is that I don't know on any given day what I'm going to be writing about, what's going to be the big themes that are going to come up. I certainly enjoy, having a view. So if I was in news, I would be reporting what happened and what other people are thinking. In my job, I say, here's what I think is going to happen, and here's why. Being able to help people interpret what's going on is great, but at the same time, like having a view and helping them understand really what's happening and what will likely happen in the future and what the risks are around that. And then I think the third thing is interacting with some of the people. I work with some very smart people. I've been very fortunate in my career for the last 20 years to work with some of the smartest people in the world. I enjoy being on the radio and on television, kind of sharing knowledge. Maybe in a way it's a little bit of an ego boost to do it. I think I enjoy it because it's something different and takes me out of the monotony of just writing research all the time.
Can you think of some specific example when your views about the future have changed someone else's views and perspective, and that made you feel particularly good because they didn't understand, those factors and risks, and you have shed more light?
During the financial crisis in particular, not a lot of people understood how quantitative easing, so the large-scale asset purchases that the Federal Reserve did at the time, how those worked, what they meant. A lot of people thought that it was printing money and we were going to have hyperinflation because the Fed was printing money. We basically spread the word that this wasn't necessarily inflationary because there were other assets that acted like currency that were just going away, that were just disappearing because of the financial crisis. And because of that, what the Fed was doing was just replacing those assets with some new money on their balance sheet. A lot of people were like, yeah, I hadn't considered that. Like, that's really interesting. That's really different, and a way to think about this that's not in the financial literature. By the time something winds up in the financial literature, right, it winds up in an AFA publication, the American Financial Association publication, which I'm a member of, by the way, or something written by someone at the NBEA, also something I'm a member of, the National Association of Business Economics. It's old news. We get in front of that. We write what would be considered academic kind of papers and this interpretation stuff in real time, whereas the academics wind up writing about it a year, 2, 3 later. There's certainly a reason to look at things in hindsight because there are lessons to be learned that should be avoided in the future or to understand things better in the future, but I do those same kind of things but in real time. Interpreting what investors are going to do going forward is very difficult. You can't always be right, and maybe from a psychological standpoint that is the hardest thing. There's a lot of people who fret when they're wrong. If you have good reasoning for your ideas, people will forgive you if you're wrong. And that's the kind of the first thing that I learned early on. And if you're right 60% of the time, you're doing fine. You just have to also realize that you can't be wedded to your views, that your views aren't always right. So you have to be willing to pivot. You have to be willing to say, hey, I made a mistake, look back at why and how you made that mistake and try to avoid it in the future. And it's impossible to avoid it forever because things happen. I mean, there's headlines that come up that just have to completely change. I mean, when the facts change and the facts on the ground change, you have to change your opinion. You don't have a choice. Dealing with management sometimes is always hard. And it depends. I've been very fortunate in most of my career. I've worked for some very good management teams. I find that the best managers tend to be those who hire good people and let them do their job without micromanaging them. I want to say it was 2005 or 6. I was part of the interviewing team at Credit Suisse, and we interviewed this kid who went to a Columbia University. He was in their MBA program, and I was super blown away by him and really impressed. And I walked into the room with the HR people and the other interviewers and said, we have to hire this guy. And so the HR person said, well, why? I said, he's going to be my boss one day. And lo and behold, 10 years later, he was my boss. So he actually hired me to come work for him. And he was, super great and just an awesome person to work for. The number one thing was that he could trust me to work on my own. And being able to work on your own without a significant amount of oversight is very important. One of the things I think people find most surprising about our job is everyone thinks that all we do is model, and these models that we create in Excel or in MATLAB or whatever tool we use, that we just blindly use those for our forecasts. And that's not the case at all, because none of those models can be perfectly specified with every potential variable that's going on. And markets move quite frequently just because of sentiment. You can't add sentiment into a quantitative model. So the way that I use my models, and I have several models, I have actually 3 different models that I use to come up with my interest rate forecasts. So I take those kind of as a baseline and I use them, but ultimately I use some subjective judgment as to say, these are too high or too low. That's actually served me pretty well because, we have, okay, here's what the model says X, and the inputs to the model matter too, right? So especially if you're forecasting forward interest rates, so like where are 10-year yields going to be at the end of 2020? Well, guess what? You have to put in some kind of variable that is going to be another forecast. One of my models might have 4 forecasts for other things that lead to a forecast for 10-year rates. Well, what's the risk that those inputs is going to be wrong? By how much and in what direction? So you wind up running a number of different scenarios and kind of, licking your finger, putting it up, feeling which way the wind blows, and adjusting your forecasts a little bit because of that. And I think that surprises a lot of people. Particularly, I think that a lot of people coming out of school are surprised by that. I think having a good foundation in macroeconomics and in econometrics, whether it's advanced statistics or kind of econometrics, 1, 2, and 3, knowing how to use MATLAB would be pretty helpful. When I say macroeconomics, one of the things that I find is people who come out of school, they understand some of the concepts of macroeconomics and kind of how GDP is calculated based on the Keynesian model kind of things. But what they don't understand is all of the data that comes out and what it might mean and how it impacts the economy, because it's the economic system that we really study. Understanding how these different data releases interact and interreact are very important, and I think that that's something that we don't get enough of in college. How does the market react to this very number? And those knee-jerk reactions can be very meaningful, and then other times they're not. But there's a lot of people who come out that don't understand that, they might think, oh, housing sales matter a lot because they're an input to GDP. Market doesn't move on. The market cares about some things that cause housing sales to move around a lot, right? So they care about things like income, like retail sales. In the very beginning of my career, I had no idea what I was doing. I really took the first job that came along, and it wasn't the right job for me. As I progressed, I realized fixed income really attracted me. I think because it's multi-dimensional, whereas so equities and things like FX I describe as kind of two-dimensional, where basically you have direction and pace. In fixed income, you have direction, pace, but also shape of the curve. So you don't have a homogeneous market. So there's only one US dollar, there's only one euro, there's only one stock for Apple, but there's 10 bonds for Apple that can be in dollars and euros. So you have multiple different factors that go into fixed income. And for me, it just made things much more interesting than focusing, almost primarily on, what's going on with this income statement. That's, to me, that's boring. If you want to be in macro strategy, whether it's FX strategy, rate strategy, FX strategy, commodity strategy, even equity strategy, I think it's really following what's going on with the macro environment. What do members of the Fed say? So read some of the speeches that people at the Fed are saying. Understand what's going on in the various markets, just knowing what it is. So I'm always much more impressed when people ask me questions about something that they noticed in the market that didn't make sense to them when interviewing them. So if they say, I didn't understand, 10-year rates rallied 20 basis points, and I'm kind of confused why they did, because this little bit of news didn't seem particularly relevant. Know that you don't know anything. Be very Socratic about it, and it's because you don't. I don't know very much either, and I've been doing this 25 years. So there's always things that you could be learning, and be curious. I tend to be a pretty unusual interviewer, and so I like to ask people why they like to work with people. We provide service to people, and you have to be willing to, take the really basic question and be able to articulate and explain your views to people who might be significantly less understanding about markets than you are. But at the same time, you also have to deal with, chief investment officers of trillion-dollar investment companies. Like if I'm on the phone with, the chief investment officer of PIMCO or the head of fixed income at Vanguard, I have to be articulate and not nervous about that. So I have to be willing to provide good customer service in all of those instances. Anyone who knows fixed income know how to price a forward. That's always one of my first things that I say. I always see these people who say, I took fixed income derivatives. I'm like, all right, what 2 instruments do you need to determine how to price a 3-year rate 7 years forward? And I just want to know the instruments. I don't want you to calculate it. Just tell me the instruments. That would impress me more. In fact, that was the deciding factor. We had 5 really good candidates. I asked that question. The 2 finalists could answer that question. The other 3 couldn't. It's hard because, it's always your first in, but at the same time, it's there's so many good CVs and resumes that you get. What kind of thing can differentiate you? So, because everyone works for the investment club, everyone took all of these, everyone has a 3.8 GPA, which by the way does not impress me because I didn't, and look where I got to. So I guess the thing is what gives you the passion, like almost like having a statement at the top. I am passionate about this job that I'm applying for because, right? And don't put it in a cover letter because no one reads cover letters. Everyone just pulls cover letters off. Everyone just looks at your resume. So they want to know, what kind of courses you've taken. And take courses that are relevant. So take economics, take financial engineering, right? These are courses that are relevant to someone who wants to be a macro strategist. Don't only take finance and study balance sheets and stuff. I mean, I know how to go from an income statement to a balance sheet, but do I ever use it? No, I don't care. It's irrelevant to what I do. So if you want to be a macro strategist, take more of those, macroeconomics and financial engineering and econometrics courses. It'll do you far better than it will be taking, equity valuations or something like that. The most important things to succeed as a macro strategist are, one, flexibility. Two would be great communication skills. I think when people think about research, they think about writing papers, but a lot of our communication is done not only through our writing ability, but also through our verbal communication ability. And I also think having the base knowledge of macroeconomics and econometrics is very highly beneficial for people starting out. And if you don't know anything about the Fed or kind of the inner workings of the monetary and banking system, that would be something that I would recommend that you study. I joke around that the smartphone has reduced productivity on Wall Street by probably 50% over the last decade or so. So my trick really is just putting music on my headphones and ignoring everything, right? We have multiple ways of communicating. So whether it's email, text, we have IBs on the Bloomberg Terminal that are chat rooms that flash all the time. So when I get into my writing mode, I definitely put on blinders and basically focus solely on that. Figuring out what to write takes all the time. The actual production and writing doesn't take any time at all. So I might spend 4 or 5 hours trying to figure out what to write and saying, here's the story I want to tell. But once that's cognizant and I have kind of an outline of that, then the actual writing of it takes no time at all. Because you might also go through 2 or 3 or 4 ideas that just aren't compelling. Like you think, oh, I'm going to look at the volatility market. I'm going to look at the options on interest rate swaps market. And maybe there's just nothing interesting there. First is not take responsibility for mistakes or bad calls. There's no shame in being wrong as long as you're not wrong all the time. I even had a boss one time who was wrong all the time, and they kept him around because he was wrong all the time. So the trading desk did exactly the opposite of what he said all the time. I'm not kidding, true story. Maybe there is some value in being wrong all the time. But I think owning those mistakes. I think not being willing. There was one person that I didn't hire but worked on my team who ultimately he didn't like working with customers. He didn't like going out and visiting customers. He didn't like speaking. He wasn't articulate, wasn't comfortable. It's very, very hard in that way. I think it would depend on where you're coming from, but generally speaking, it's pretty difficult. I have to admit that I was very lucky in finding the job. So I actually, when I first moved up to New York, I worked at the Vanguard Group, and I didn't particularly like it. It was a good job for someone, just not for me. And I wanted to move to New York. So what I did was I actually got an internship in fixed income risk management. I did that first for over a year. And I was willing to take the minimal pay in order to get the experience that helped, put something on my resume that was interesting and propelled me into fixed income research. So I knew what I wanted to do in terms of my career path. I knew I wanted to work in fixed income. Didn't know exactly what I wanted to do. I didn't know if I wanted to be in sales, trading, research, risk management. And when an opportunity in risk management in fixed income came up, I jumped at the opportunity to do that. And having that job really helped me kind of hone both my skills, because I really understood kind of firstly risk management much better, but also how the trading desk thought, right, and what they were doing and how they managed risk. When you're in fixed income research, a large portion of your audience winds up being your internal traders. So understanding how they think and how they do their job and why, I think is very very important. There are people who have been in my position for about as long who have left and kind of hung a shingle and tried to be researchers on their own end. I'd say 1 out of 10 of them have any success. It's difficult because you basically need to have a very strong client base, and you have to be willing to sell, because at the end of the day you're selling your own ideas. There are some independent firms for sure that aren't Wall Street firms or Bloomberg. So those firms also do the same thing. They just have multiple people and they have their own sales force. So they're a little bit different, a little bit better. In fact, I know someone who used to be a fixed income strategist, went to the buy side and was a portfolio manager at a large portfolio management business, and he now works at a independent research firm. And ironically, he's a customer of mine because he has a Bloomberg Terminal. So he and I still keep up. For the last about 5 years or so, since about 2015, the fixed income research departments across all of Wall Street have shrunk very considerably. Now they seem to have stabilized at this point, but when I first went over to rates research in 2007 from credit research, we had a 7-person team. For a long time, for about 10 years, we had a 5-person team, and that team right now is 2 people. The one challenge within fixed income research is that it's a cost center, and everyone's trying to rein in costs. They want to have fixed income research, but at the same time, they don't want to maybe do the depth of research that we used to have. So that has changed the industry a lot. There is an opportunity because there's other firms that are willing to expand fixed income research. So I'd say maybe the total amount of jobs might be similar to what it was, but finding ones at larger banks is more difficult because those teams are smaller. So you have to wind up going to like second tier broker dealers that are looking for fixed income research, but they only want 1 or 2 people. So the challenge that we have now is that there's a lot of very experienced people, but not a lot of junior people. My old junior person at Bloomberg, he actually went to the sell side to do credit research because there basically was no one else who was junior, kind of someone with 2 or 3 years experience, except for him, who was applying for that kind of job. Because they didn't want someone with 15 years experience, they wanted someone with 2 or 3. So if you can get one of those few jobs, your career path is probably going to be pretty good. I think the person I'm most grateful for is a person by the name of Henry Yu, who's now up in Canada selling bonds. And he gave me a chance actually as a sovereign strategist, so as a macro strategist in his group, and he gave me my first job. So I'm very, very grateful to him. Yeah, I think I definitely would have gotten an internship on Wall Street during my time as in college when I was in graduate school. I didn't do that, I think, because I wanted to travel, and so I traveled instead of getting an internship, and I think that set me back a couple of years in my career for sure. Not in finance. I'm actually looking to pivot maybe to a new career doing something that's a big passion of mine, and that's soccer related. So we'll see. We'll see how that goes. But in the meantime, I plan to be at Bloomberg for a while. So I don't know if this is exactly advice, but this is something to remember. So this comes from the person who's now the chief investment officer at Invesco, old Oppenheimer funds, and an old boss of mine. But he said He said, this firm doesn't care if you're here or I'm here. It will exist long after we're gone. So just keep in mind that a lot of people lost their jobs during the financial crisis, and people still do today for no fault of their own. There's kind of an institutional memory that you have to remember is always there. Well, right now, I wish I could solve all the trade tensions, because I think it's a really silly, a really silly thing that's kind of very artificial and very political. The other thing, and I don't know if this is a world problem, but one of the things that annoys me the most, that I have to write about all the time because of what I do, is I really, really wish the debt ceiling would go away, because it's the most, pardon my French, but it's the most asinine thing that we have to worry about raising the debt ceiling so we don't default on the debt, which is just really silly. If we want to have a budget fight, let's have a budget fight and talk about how much money we spend versus how much money we take in. Let's not say, hey, we're not going to pay the bills even though we have plenty of money in the checking account. That's just silly.
Your favorite food?
Ooh, I like a good old American hamburger.
Favorite thing to do in your free time?
Oh, I play soccer. I'm a coach, and I also have a podcast about some lower division soccer. Yeah.
Your favorite country to visit?
I really, really love the Netherlands when I visited.
One thing you cannot live without?
One thing I can't, well, definitely my wife and kids, for sure.
Your favorite book?
Favorite book? Ooh, lots of them, but I would have to go with Lord of the Rings.
Do you have a favorite show or movie or podcast?
I love the Total Soccer Show as a podcast. My favorite movie of all time would have to be Star Wars.
What makes you sad?
I don't know, I'm a pretty happy guy.
What makes you happy?
My kids make me ecstatic all the time.
Can you finish a sentence? You should get into my profession if you are...
Very curious.
You should not get into my profession if you are...
A bad communicator. Don't give up on your dreams. Make sure that everything that you do goes toward those dreams, even if you have to do a job that's similar to it. Keep on chugging away and applying for those jobs.